ISAs, or individual savings accounts. They're something that we really all should be using, but many people don't because of the wide number of options and all of the rules surrounding ISAs. So this video will explain everything that you need to know about UK ISA accounts. Should you get an ISA? How to use an ISA? How much can you put into an ISA? Even if you're a beginner that's just overwhelmed with all the options out there, this video will explain everything that you need to know about all of the different ISA options. So let's get right into it. To put it simply, an ISA is a savings or investment account where you don't pay any tax on the interest or returns that you earn. That includes UK income tax, dividend tax, and capital gains tax. Now, there are a few different types of ISA accounts available, but one of the main rules is that you can only pay into one of each type of ISA during each financial year. And I'll go into more detail about the different types of ISAs in just a second. But as an example, if last year you had a cash ISA that you paid into, but this year you found another cash ISA that has a better rate, you can open that new cash ISA and pay money into it during this financial year, but you can't continue to put money into your old account. Another key point with ISAs is that you can pay in up to a maximum of £20,000 per financial year. This is known as the ISA allowance. Now, this amount can all be deposited into one type of ISA, for example a cash ISA, or it can be spread across different types of ISAs in the same financial year. Once I go on to explain more about the different types of ISAs, this will make more sense. Before we break down the different types of ISAs, it's also important to know that there are flexible and non-flexible ISAs available. And this is really important, especially if you think that you may need access to these savings during the year and you're not confident that you can safely put it away and not touch it for the whole year. A flexible ISA will allow you to withdraw from it, and as long as you put that same amount back into the account before the end of the financial year, it will not affect your ISA allowance limit. For example, if you had £10,000 saved in an ISA and you need access to some money, so you withdraw £5,000, as long as it's still within that financial year, you'll be allowed to pay back in that £5,000 plus the extra £10,000 of allowance that you haven't used yet. With a non-flexible ISA, in that exact same scenario where you withdraw the £5,000, that money is then removed from your limit. So the maximum you'll be able to pay into the ISA for the rest of the financial year is £10,000. The £5,000 that you took out plus the remaining £5,000 of the £20,000 limit. So when choosing an ISA, it's important to take flexibility into account, especially if you believe there is a chance that you may need access to the funds during the year. So the first type of ISA, and probably the most well known, is the cash ISA. This essentially is just a savings account, but one that you don't pay any tax on any interest that you've earned. To open a cash ISA, you only have to be 16 years old, and you can pay in up to £20,000 per year, or just part of that if you're planning on using different types of ISAs. Due to the economy and everything that's going on in the world at the moment, over the last year, the interest rate on cash ISAs has dropped significantly, and the top rates available today are around the 0.4 to 0.6 range, which is actually lower than the current rate of inflation. So saving money in the cash ISAs at the moment with the current interest rates would essentially mean that you're losing money over time due to inflation. So from my own personal point of view, especially for this financial year, cash ISAs are not something I would actually use. If you've maxed out all of your other savings and you're looking for somewhere that you can save money and reduce your tax bill by not paying any more tax on interest, then a cash ISA could be an option, but I personally would go for one of the other types of ISAs where you can get a greater return on your money. Before we go on to the next type of ISA, if you found any information in this video useful, please give it a like because it really helps out the channel. And if you haven't done so already, you can claim a free share worth between £3 and £200 when you sign up to Freetrade using the link in the description. A stocks and shares ISA is a lot different from the cash ISA, and it has a lot more flexibility. For a stocks and shares ISA, you do need to be 18, and like all of the others, you can put in the maximum of £20,000 per financial year. With the stocks and shares ISA, the money doesn't just sit in the savings account. You can use the money within the ISA to invest in a lot of different things. You've got the stock market, bonds, funds, trusts, or even shares in individual companies. The benefit of doing this through the stocks and shares ISA is that you don't pay any UK income tax, capital gains tax, or dividends tax on any of the returns or gains that you make from investments that are held within the ISA. While this is a big benefit, it's important to remember that it could be not completely tax-free. For example, if you decide to invest in shares in the US that pay out the dividends. They have what's called the US withholding dividend tax, and that'll be a 15% dividends tax as long as you complete a specific form that allows you to be eligible for a discounted rate. A lot of the companies that offer stocks and shares ISAs make you fill out this form automatically, but it's worth double checking just in case, because without this form filled out, you'll be charged at the higher rate of 30%. There are still some other less common and less known taxes that could still be applied to your investments. So it's important to do full research into the investments that you're making. But even with these taxes, the big benefit still remains that you're free from UK income tax, dividend tax and capital gains tax when you invest within a stocks and shares ISA. There are a lot of different types of stocks and shares ISAs out there. There's ones where you're in complete control of the investments and you choose where you want your money to go, all the way to the other side where your money is looked after by a team of qualified investment managers who do all of the research and investing for you. The level of competition around ISAs, and in particularly stocks and shares ISAs, mean that it can be confusing to decide which one to go for. But a benefit of there being so much competition is that the prices have got a lot cheaper over the years, and you can find many now that are very cheap or even free. Obviously, with investments, there is a risk and the market can be quite volatile, but depending on your experience and your strategy with your investing, or if you choose to go with a qualified investment manager, you could earn potentially quite a lot more through the stocks and shares ISA than you can through the cash ISA. And I have a video on the best stocks and shares ISAs available in the UK in 2021. That video will be part of a short ISA playlist, so make sure you check that out at the end of this video. The Lifetime ISA, also known as LISA, is one of the less well-known types of ISA account. It can be opened by anyone aged between 18 and 39, but once you've got the account, you can continue to pay into it up until the age of 50. The difference with this type of ISA is that you can only pay up to a maximum of £4,000 per year into them. The reason being is that the Lifetime ISA is kind of similar to the old Help to Buy ISAs that were available, and they are there to help with saving towards your first home or retirement. To help do this, the government will add a cash bonus of 25% of the money that you invest, up to a maximum of £1,000 per year. With the Lifetime ISA, you can either choose to save or invest, so that's similar to the cash ISA or the stocks and shares ISA. However, with the stocks and shares ISA or the investment side, you can only get the fund versions and not the ones where you have complete control of all the investments. Like I mentioned earlier, you can withdraw this money to be used to help buy your first home. This will be a new house up to the value of £450,000 and one where you're not paying outright but you're getting a mortgage. If you don't use this money to buy your first home, the other option to use it is in retirement. If you withdraw the cash before then for any other reason, you'll be charged a penalty, which at the moment stands at 20% of the money that you withdraw. So putting money into a Lifetime ISA is only for a couple of very specific reasons, and it's a longer term strategy, so you need to make sure that you're not actually going to need that money in the near future. The Innovative Finance ISA is probably the least known of them all. The same criteria applies, where you have to be 18 and you have a maximum limit of £20,000. The idea with these type of ISAs is that the company offering them will use the money for peer-to-peer lending. This means using it to lend to individuals or businesses. When the company lends out the money, they obviously charge a decent amount of interest, and your return for using this type of ISA will be a percentage of the interest rate that they charge. However, as I'm sure you can imagine, there are risks with this type of ISA as well. The main one being that the individual or business that borrows the money simply doesn't pay it back. The ISA companies try to mitigate this risk by spreading your money across a number of different loans. Or they might have a safeguard fund in place, but they're not actually required by law to have this. While the returns on these types of ISAs can be quite good, I would say only put money into this type of ISA if you can afford to lose it should things go bad. The fifth type of ISA available in the UK is the Junior ISA. Just like the standard versions of ISAs, this allows you to save completely tax-free, but this time on behalf of your child. With these Junior ISAs, you can save up to £9,000 per year, and this is separate from your personal £20,000 allowance. You also have the option of dividing the allowance to either a cash ISA, a stocks and shares ISA, or a mixture of both. Your child won't be able to access any of the funds until they turn 18, at which point the money becomes theirs and not yours, and so they'll have full legal control of that money and can do with it what they want. One interesting thing to point out is you may remember from the cash ISAs that you can open one from the age of 16. So that means for children aged 16 and 17, they have two ISA allowances available to them. They have their own personal £20,000 allowance if they open their own cash ISA, plus the £9,000 allowance still on their Junior ISA. After watching this video, you may know what type of ISA you want to go for, but want to know the best options that are available out there. Well, this video is just the first in a mini series about ISAs, and in the future videos I'll talk about the best options available for each of the different types of ISAs. When I've made and uploaded these, you'll be able to check them out here. And if you found this video useful, please give it a like because it really helps out the channel, and subscribe for more videos like this in the future. And don't forget, if you haven't already, you can get a free share worth up to £200 by signing up to Freetrade using the link in the description. Thank you so much for watching, and I'll see you in the next one.